Thanks for joining us. I'm Marlon Bowling with you as we get ready to open up our trading day here on a Thursday. And we're going to welcome Rich Nelson of Allendale Incorporated. He's based in McHenry, Illinois, and get his analysis on what to expect in today's trade. And Rich, yesterday was kind of exciting for a change.
Certainly was. Good little rebound here. Trade talking about this lower U.S. dollar finally after you and I have been talking about this for a couple weeks. But certainly good to see the trade get a little more excitement here under its wings after what's been quite a moribund winter for the most part.
All right, you were talking about the dollar. What do you think is going to continue to happen with that dollar? Some analysts that I've been speaking with said they think it could drop even more.
You know, I think that's probably the case. It looks like we're obviously in a clear downturn right now. Looks like the trade is still talking of concerns about U.S. Tariff policy, things like that, and perhaps maybe some repercussions here for the U.S. side later on. So as of right now, I think it's in a downtrend, and I would probably argue for another maybe 200 points lower at some point here these next 2 weeks here.
Well, looks like it's already down about, 800 points again overnight, the way it looks, down in the 88s. Let's talk about the grain trade here from yesterday. We had the wheat market actually take the leadership role. It went higher by double digits in quite a few contracts yesterday. Let's take a look at what it did overnight in the wheat, and we'll go check out that Chicago wheat market first, if we could. And right now on the Globex trade, last check, we had the March Chicago wheat having follow through. We're up 4 1/4 again at 437 1/4 on the Kansas City side. We have the March contract trading 5 1/4 higher overnight at 438 1/4. It's had quite a run here the last couple of days. That'd be about 15 cents worth. Looking at the Minneapolis trade, here you have March 5 1/2 higher there at 613 1/2. So is that something that they can build on, or do you think we're going to be inundated with profit taking?
You know, I think at this point, actually, for the wheat, we're actually suggesting maybe this is going to be a good temporary bottom to work from. Of course, we know about these winter kill discussions. We had 5 days this past winter of below 10-degree temperatures here for most of Nebraska. So that is something which is still being talked about and probably will be in the discussion as long as we have also this dry weather forecast lined up all the way through April. So I think this is a valid issue to discuss, and maybe the market's going to reflect some risk right now.
Yesterday, we had the ethanol production report that came out from USDA, or actually from the ethanol industry, rather. I understand that was actually a new record for that week again, wasn't it?
You know, for the most part, it was 1.062 million barrels per day was the number. That was great. However, got to point out this was maybe 1% over last year. In the past weeks, aside from our little cold snap-based issues, we have been running maybe 3 to 4% higher than last year. So good to see. I actually think it should be a little higher. So we'll see if this next few weeks picks back up. However, though.
But what about the stocks? Weren't they also a record high for that week?
You know, certainly were. In this case, 23.8 million barrels was the number, and that's actually about 9% over last year. So maybe a little higher, but in the past 2 weeks, we have seen numbers about 10 to 20% higher than last year. So within what's been seen in the past few weeks here.
Well, seasonally, when you look at the corn and you get the first of the year cash sales out of the way, where does that put us in this corn market here overall? Do we seasonally start to see a bit of an upward trend here in the market or not?
And we certainly do. You know, usually, obviously, we have a clear set pattern on cash corn prices, which are obviously some harvest lows up into spring highs. And in terms of current pricing, especially with yesterday's rebound in mind, we maybe have a small part of this potential upside in the market here. So we'll see if this continues here. We do have some headwinds. A lot of people are going to make some cash sales these next few weeks in front of these banker meetings here.
All right. Well, Rich, we'll come back here in a moment, and you and I will talk about what's going on in the livestock trade as well. Our guest is Rich Nelson. Don't go anywhere. We'll be right back, sorting that all out when we come back. We're talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois, and I want to focus on the livestock side as we get ready to open up our daytime session here. And yesterday afternoon, we got the delayed, and I will underline delayed, cold storage report from USDA. It was supposed to have come out on Tuesday, but because of that government shutdown, they needed a little more time, they said, so they pushed it back to Wednesday. And we do have the numbers. They came out yesterday afternoon. So here is a rundown of the numbers on the red red meat side. Let's take a look here. Total red meat, combining the beef and the pork together, the change from November, the inventory in the nation's freezers would be down 1%. The change from a year ago would be down 6%. Now, if you single out the beef and look at that, it was 1% higher than in November, and the beef inventory was down 14% from a year ago. On the pork side, we were down 2% from November, but up 3% from a year ago. And then you have that pork belly inventory, and that tends to move in vast numbers. It was up 13% from November, up an amazing 121% from a year ago, and this is nationwide. It's hard to imagine, Rich, nationwide, more than doubling the amount of bacon on hand. That seems kind of extreme.
It certainly does here. And these beef stock numbers are pork stock numbers, and also beef side as well. These are very seasonal in nature, so a lot of this does have to do with featuring for various issues that happen during the winter. And, of course, we're ready for this big drawdown season up ahead as we go into the spring, then summer period. And that's when these stock numbers, especially for pork bellies, which is bacon, certainly get quite a bit of fanfare in the trade's mindset here.
Is that usual to see a move that big in the shift in inventory?
As far as the numbers here for this particular month, not too much, but certainly in the grand scheme of things, this was not anything in the big picture that really stood out as far as the numbers there.
I don't want to leave out the cold storage report for the poultry side either. And on the frozen poultry supplies, the inventory was up 1% from November. It was up 10% from a year ago. And the chicken inventory was down 1% from November. It was up 10% from 2016. And the frozen turkey up 8% from a month ago, and it was up 12% from a year ago. So overall, it looks like the poultry stocks in the nation's freezers were really on the increase.
Certainly right, and especially with this, I'd say, moderate expansion going on in all phases of the livestock right now. This is something we do have to watch very closely, especially on the chicken end, which is the nation's #1 protein. So, yes, as it stands right now, perhaps we're seeing a small amount of product now being overage and pushing into the stock side here.
And, of course, we will get the cattle on feed report tomorrow after the market's closed, so that schedule has not changed. They are looking for lower placements this time around, down about 3% from a year ago. Are you falling in line with that kind of an estimate, or do you think it'll be different from that?
For this month's numbers, actually, we're very close to the average guess. We're suggesting about a 3.9% drop, mainly because of some issues on the profitability side. We do have break-evens for these outgoing cattle from December through March, about 123. So it looks like that might be a high bar to hit, and maybe was an issue discouraging some of those placements last month.
Now, the beef cutout values yesterday afternoon from USDA were higher, led by the choice cuts on the beef. They were up $1.14. We had select cuts yesterday up 69 cents. However, if you look at the pork cutout side there, most of the primal cuts were all on the downward swing, and we had the bellies up $1.80, but everything else was lower there. Is that going to guide the trade direction today, Rich?
I think for today's discussion, it probably will be a very key point. People have been watching this cash hog issue and seeing that rising market, but not yet on the wholesale pork. Perhaps now with this little shakeup on the weather side, we will see a little more interest on the wholesale end, and that might give us some more stability for us on the cash hog end as well.
Thank you, Rich. Rich Nelson is with Allendale Incorporated in McHenry, Illinois. Janet, the table is set. We are about ready to take off on this livestock trade in about 5.5 minutes.
See what Thursday has in store.
Sure.
Thank you very much, Marlon.